Hello, everyone, and welcome back to another episode of the Market Outlook series. I'm Kavita Agrawal, the founder of EXP Invest, and every weekend we are going to talk about Nifty, Bank Nifty, and the chart analysis. This entire week has been full of a lot of excitement for the market. Interim budget, volatility, sideways consolidation, choppiness, everything seemed to be part of this week's market activity, including a new all-time high just today. So let's get started with the 3-minute time frame of Nifty and decode the price activity. So what you're seeing on the chart on my screen is now the 3-minute time frame. On the 3-minute time frame, a lot of mixed signals have emerged in a very short period of time. This is very unusual. This in itself shows how volatile the market is, because this is basically the intraday traders or the option traders market, because there's just so much volatility. It is not very ideal market for positional traders or swing traders like ourselves. So what we can see here is up to the date of 25th January, there was strong positive divergence, which ushered this next leg of rally that we've seen, this around 850 points of rally that we've seen. Now here we had seen a negative divergence on the 30th of January, which took the market down around 1.6%. The RSI touched the level of 30 and then bounced back up, a little bit of sideways consolidation, confusing market activity. Today we saw a massive gap up. So the market opened with a 150 point gap up almost. And after that gap up opening, we continued higher we continued around 250 points rally on Nifty, which took the market 2% higher. But then whatever rally market had delivered since the opening got entirely covered again in the decline. This is not a very good market activity. This is actually a sign of bearishness, and we will talk more about it when we go to the daily time frame. On the 15-minute time frame, what I can see is that again there was a strong positive divergence, and the 200 EMA of the 75-minute time frame, or basically the 1000 EMA of the 15-minute time frame, lent very strong support to the price, and we saw an upside. Now here there is really not much to see. The volume activity, if we take a close look, every time the price has gone up, the volume activity has increased, which is a strong sign. Overall, the RSI is in positive range, which is also positive. 75-minute time frame, this is where actually the problem begins, because on the 75-minute time frame there is a strong RSI negative divergence, which does not make me very comfortable. Today, in fact, even though we saw a brief moment of an all-time high, what you will notice is the RSI has pretty much taken resistance at the level of 60. This is, like I said, not very strong, and this might take us to the next leg of correction, which might go all the way to 21,000, but too early to tell anything. I was looking out for the resistance of 21,850 to get breached in a sustainable manner. It did get breached in a sustainable manner, and just today with a massive gap up, because this 21,650 and 21,850 has acted as a strong resistance zone where the price has hovered for quite a while. And today it opened almost at 21,850 and then continued higher to the next, beyond the next resistance of 22,000. It touched this trend line resistance right here and immediately turned back down to close again at this key resistance level, nullifying it. Basically 21,850 is where it closed. So this is the 75-minute time frame. All in all, 75-minute time frame says not good. Now the biggest sign of weakness is actually on the daily time frame, because a very bearish candlestick pattern has emerged. Now if you remember, last time we noted that at the same price the island reversal had appeared, which then took the market down. This time again, as the market went above 22,000, it has created this inverted hammer or the shooting star pattern. They are both bearish reversal patterns and not good news for the market. Of course, this needs confirmation. We need to see a confirmation tomorrow. Basically, a closing below the level of 21,800 is required for a confirmation, and a real confirmation, in my opinion, will come when the market closes below the level of 21,650. In order to nullify this entire this candlestick pattern, we need to see a closing above the highest wick, that is a new all-time high, and a close above that all-time high to nullify this candlestick pattern. When does this candlestick pattern appear? If we go back to the 3-minute time frame, it basically appears when the market opens, rallies but fails to sustain that rally, basically hits some kind of resistance, which in this situation is the green zone, the all-time high, the trendline resistance, whatever you want to call it, and then sharp sell-off takes the market back down to the opening level. That is exactly what we saw today, and this is not a very good sign. Now let's move on to Bank Nifty and see if we have better news there. So coming down to the 3-minute time frame, what I see on the 3-minute time frame is the bull range sustains on the Bank Nifty, which is actually quite good, considering that there is like this Even though the price has gone significantly lower, the momentum on the 3-minute time frame has been really strong. If you look at the 15-minute time frame, again, even on the 15-minute time frame, a strong positive divergence is visible, just as it was also on the Nifty. On the 75-minute time frame, again, what we notice is that the RSI is again taking resistance at the level of 60, which is not very bullish for the entire market. So I'm expecting, based on the analysis of the 75-minute time frame, what I'm expecting is that, so this is a really broad range of resistance here, because there's also this gap and then some consolidation and then lots of activity. If we have to say, we can say this, and 46,700 is one resistance. And if we, so the resistance zone here basically parallel to, we can say, Nifty 21,650 and 21,850. This 46,700 to 46,100 is acting as a major resistance zone. Now here, if you see, there's also cluster of moving averages also on the Bank Nifty, making it difficult for the Bank Nifty to go up. Now, why the cluster of EMAs actually matter is primarily because even if different traders are looking at different time frames, different settings, the EMAs that I use are designed in such a way or chosen in such a way that they overlap with a lot of commonly used EMAs across different time frames. Like, for example, I'm using the 200 EMA on, say, the daily time frame, or the 75-minute time frame, or the 15-minute time frame. That basically translates to important EMAs on the 75-minute time frame and the daily time frame. So they are very interchangeable, very fungible in terms of support resistance zones that they provide. So this is why a cluster of these EMAs at one area is usually acts as a important resistance. Coming to the daily time frame of the Bank Nifty, again, what I see is that clearly the volume has been picking up significantly on the downside, and this leg of upside, as soon as it started, the volume activity has clearly subdued. If you look at the histogram of volume, I basically use MACD to study volume, and you can clearly see that the color was dark green when the price was declining on Bank Nifty, which meant that the volume was getting stronger. And here, even though the volume is green, it is light green, not dark green anymore, against rising prices, which means that the average volume MACD 20-day average of the volume is still above the 100-day average of the volume, but it is declining. And this happened on the upside. So that is why I don't believe this rally that has occurred in the banking stocks. And I personally, for one, have not touched the banking stocks in this rally. So that is the daily time frame. The weakness continues. I do expect the level of 44,000 to get retested on Bank Nifty soon. On the Nifty, my support level is 21,000. Now let's move on to the intersector chart, and we'll start our analysis from 23rd of January. What I can see here is, since the 23rd of January, that is since this immediate leg of rally has started, we can see the PSU bank has outperformed the market massively with a 13.5% rally. The PSE sector has outperformed the market with 11.8% rally, and the energy sector has posted a 11% rally. Incidentally, all these three sectors are the sectors where last week I was quite bearish, so I didn't have any position in any of these sectors. The metal sector was close behind with 8% upside. Infra sector was up 5.5. Auto sector was 5.5% up as well. The FMCG sector has been pretty flattish this week. So has the finance sector, durable, consumer durable sector, consumption sector, IT sector, service sector, healthcare, and pharma. Now, this rally that you've seen in all these three stocks, let's go and take a more detailed look at the index charts and their respective RSIs on the 75-minute time frame. This is a finance sector, and here what I can see that a positive divergence has emerged. Even though I'm not very bullish on the banks and the private, on the public sector banks and the private sector banks, I am becoming a little bullish with time on the CNX finance sector. And also on the charts, I see stocks like Muthoot Finance are starting to give some positive divergence, and there is opportunity brewing. So it's been identified now. It's in my monitoring watch list where I will monitor them for a potential entry point. This is Nifty, this is CNX IT, and what I see is that CNX IT is very bullish, and today Infosys in fact gave a breakout. Realty sector continues to be very bullish. If you've gone through the interim budget, it is very evident that the rally which has been unfolding in realty and infra is going to continue in the market. Now the pharma sector is starting to show early signs of topping out, and fresh positions have to be made very carefully here. You want to focus more on booking your existing positions or trailing stop losses on your existing positions. Healthcare sector, again, the outlook is very similar to the pharma sector there. Metal sector, I think a fresh leg of rally has unfolded, and this was reminded to you of on 23rd January. And I think this rally is going to continue further. Private sector bank, PSU, we've discussed. Bank Nifty, we've discussed. Public sector enterprises surprisingly continue to rally, and I am getting a little tempted, but then also my own principles of not entering a stock after the rally are acting as a little bit of a friction there. But PSE sector, they do make for a good buy on dip opportunity, but please maintain strict stop losses because a lot of rally has unfolded there. The service sector, not much to say. The media sector might give you some short-term opportunities because the media sector has declined very significantly and a bit of a positive divergence is beginning to appear there. Commodity sector, I feel, has started a fresh leg of rally. Consumer durable sector, I think they make good investments for the long term, not so much for the short term. Consumption sector is experiencing a little bit of negative divergence and resistance. The auto sector has taken a bit of correction and I feel is now prepping for the next leg of rally. The FMCG sector, if the market goes above 22,000, then it'll be very unattractive. But if the market continues towards 21,000, then I think the FMCG sector can be quite attractive. So my top picks in FMCG right now is Marico. And yesterday, Marico and Dabur both gave really strong up moves in the market. But today, they retraced the movement as the market broke out. Naturally, because when the market is very bullish, people don't want to stay in defensive sector like FMCG. They want to move away from it. But again, because the market in the second half kind of declined, Marico again formed like a positive divergence, making it attractive for swing trading. So if you look at the CNX 500 index also, there is a negative divergence on the 75-minute time frame. There is negative divergence on Nifty June. So these are my strategic indices, and you will see Nifty Junior, Nifty Momentum 150, Mid Cap 150, Quality 30, and the Small Cap 50 have all shown negative divergences and are indicating that a bit of a correction might come in the market. With this, I've discussed what I wanted to discuss with you. I will quickly discuss the interim budget and its impact. We've already seen the price activity at our end, and now let's take a look at the notes for this. The overall feel of the budget was, I feel that the budget was quite bold. It was not very socialistic, which is usually expected of the government 1 year before the election year. So this was technically the last interim budget that the ruling party got to present. The past trend, we've always seen that the last year usually comes out with a very socialistic budget to woo the public, woo the lower segments of the economy. But this time that did not happen. I think the budget was quite bold and it was very progressive. It was very pro-development. So this was the first budget of what the government now defines as the Amrit Kal. The 75th to the 100th year of independence is what is being referred to as the Amrit Kal. And this was the first budget technically, and it did live up to the expectations because the idea of this golden era apparently is to improve the standard living of the citizens of India. So the theme that is being chosen for the next 25 years in terms of development, in the words of our respected President Draupadi Murmu, is that India is moving towards a more technology-driven and knowledge-based economy. So let's look at some of the sectors where a lot of investment opportunities as swing traders and long-term investment is going to pop up and is already giving wonderful returns. The first is infrastructure. First and foremost is infrastructure. A major chunk of the GDP, significant 4%, has been allocated for capital expenditures to boost sectors like railway, road, urban infrastructure, and port. And schemes like 4,000 rail bogie announcements and rooftop solar schemes will directly benefit lots of listed companies. Agriculture and allied sector is another segment that we want to look out for. However, in there, the fertilizers and chemical sectors are in a bit of a, I would say, unstable ground because in the budget, we see some of the subsidies that were being given for fertilizers is being reduced, being rolled back. However, the chemical sector on a larger ground, I feel, is set for a major rally in the coming times as it gets more business from the Chinese counterparts. On the rural development fronts, lots of new announcements have been made. So I don't see a lot of listed companies directly getting impacted, but there will be a lot of indirect impact in terms of the companies which have a strong hold in the rural areas. Housing is one sector where I believe that the rally is going to continue because the government has promised that it is going to continue to spend heavily in middle class housing, especially renewable energy. the EV sector, wind energy, solar energy, all of this is going to see major investments. And I can already see in the comments someone has requested for an analysis of Suzlon. And just one reminder, if you want to connect with me, please join my Telegram channel. The link of the Telegram channel is already dropped in the comments for you. I'm dropping it again right now. My Telegram channel is called Trade with Kavita. Simply go to Telegram and write Trade with Kavita. You'll first obviously have to download the Telegram app. I unfortunately don't have my own app right now. Beware of fake channels. There are lots of fake channels running with my name. One of them is appearing right now here. Don't fall for the fake channels. And yes, they do have more number of subscribers than in my original channel. That is because these fraudsters keep rotating, growing channels, so they and fraudulent activities always get more attention. But anyways, just search Trade with Kavita, and there are around 2,420 subscribers. Look for my description and look for the content. You'll see regular posting of my webinars, my services, and my YouTube links, and these stock recommendations with stock templates is what you will see. Now, if you have stock queries that you need my help with, I would suggest you drop the name and the cost price in the chat. I would love to be able to help you out, give you a potential stop loss and a target level for the stocks that you're holding. This actionable advice can help you clarify or clear your own head and make better decisions in the market. So we'll start with Suzlon. So I see there's a very strong volume pickup against the rally, which always means that the trend is being supported with higher participation, which in turn means trend continuation. So Suzlon is pretty set for a stronger rally to unfold, and what I think is that a strong resistance on the week. Now we are on the weekly time frame, so the level of 30 was a very strong resistance, and the strong resistance has now been breached. There was also trendline resistance, and the trendline resistance has also been breached, and there's been a pullback and retest of both the trendline and the important one at the level of 30 to 33. And now this fresh leg of rally that is unfolding, my personal target for this fresh leg of rally is the next resistance zone, which is 120, 125. So yes, Suzlon looks very attractive for the next few months at least. Now let's move on to the next stock, that is Apollo Tyres, requested by Vinoji. Vinoji, you've not mentioned any level for Apollo Tyre. I don't know whether I should analyze this for you for short term or long term, or whether you're holding it or you want fresh entry. The fresh entry though is absolutely not recommended here, because from what I can see, there is negative divergence and there is RSI negative range shift building here on multiple time frames. So that is definitely not recommended. Also, there is a trendline resistance, if you can see that there. For Apollo Tyre, I would love to see a bit of a correction here. It has a tendency for the RSI of the 75-minute time frame to come back down to the level of 30. That is where ideally I would like to make my position again, or at least wait for the stock to retest the 100 or the 200 EMA before even considering making a fresh position. The daily chart does suggest that the rally is still going strong, but if you see the very last leg of the upside has seen declining volume, which again strengthens my conviction that the stock might be up for a bit of a correction. And this looks like a very probable 466 looks like a very probable support and potential re-entry for me. So Apollo Tyre is one of those stocks where I do regular swing trading, and recently I booked out good profits in the stock, and now I am waiting for the stock to come back down so I can re-enter. Now, if you watched my last Wednesday session where I spoke about watch list, I told you that I maintain around 100 to 200 stocks watch list. And in this watch list, how I prefer to work is I identify stocks where there is a strong underlying rally, which basically I look for strong positive indications on the daily time frame, or a strong positive RSI range shift, or strong RSI divergence happened few months ago. Basically, strong rally is unfolding on the daily time frame, and once I've established that a strong uptrend is unfolding, I will start playing the swings on the 75 and the 15-minute time frame. So Apollo Tyre is also one of those stocks for me where there is clearly a strong underlying bull trend unfolding right now. And what I do is I just buy the stock when it goes into correction and sell the stock when it starts to give me signs of topping out. So hopefully the market is going to give me another opportunity to re-enter the stock somewhere near the level of 422. Mr. Valuru, Dr. Lalpat Labs. Let's take a look at Lalpat Labs for you. So I do see some negative volume activity. I actually had a long call for my members on Lalpat Labs because I expected that this trend line here was going to act as a support, but I was proven wrong today when basically yesterday the stock forged a doji pattern and today broke that low, triggering my stop loss. And if you look at the daily time frame, this was basically the 50 EMA, which acted as resistance back to back for 3-4 days, and on the 75-minute time frame it's basically the 200 EMA, right? And resistance was actually what made me move my stop loss up, so my members were able to get out of the stock almost at cost. And even though there is a pretty big RSI positive positive divergence on the 75-minute time frame. I want to wait for the stock to stabilize a little bit, because like I told you, pharma stock is topping out, so I don't want to tempt fate. Because here also, if you see this blue line, which is the 200 EMA of the 75 of the daily time frame, sorry, my 200 EMA is hidden because I was doing some analysis. Yeah, so the 200 EMA on the daily time frame basically got breached very briefly here, which I'm not very comfortable with it. I'm in midways of whether it has been breached or whether it is taking support. It's not very clear, because it was pierced for sure, but then the price went up, and now the 50 EMA is also acting as resistance, so it's very confusing. So I don't like trading with that confusion. For now, I have exited the stock. I will see if it goes back down to the 200 EMA and decides to go back up. This yellow trend line, this yellow channel will basically act as alert for me, and whichever direction the price of Lalpat Lab breaks out is where basically my conviction is going to go. And this is very normal in technical analysis and swing trading, that sometimes the charts become a little confusing for you. So it's best to take a step back and let for some clarity to come in before we commit our capital, because ultimately when you're trading, we need to hold our capital to the highest standards and do what is best in order to preserve it. So Jaswinder Singh is asking for Electra Green Tech. Is it good time, given that there will be a lot of focus on green energy and sustainable future by the government? Electra, let's take a look at it technically. So I think, see, this, what has come out in the interim budget, even though it's great, honestly, it is not out of the ordinary. It is nothing unexpected. So what I think is that this interim budget has already been priced in. If you look at the chart of Electra itself, it has rallied 72% in a matter of 3 months, right? And even though the underlying trend is very strong in the stock, I don't think it's a good time to make a fresh entry, because again, if you see, the stock topped out technically on the 10th or 11th of January, because that is when the volume stopped really catching up. And this consolidation has seen almost absolutely very dry volumes. On the 75-minute time frame also, I do see there is a negative divergence here. So I would like to wait for the stock to take a bit of a dip before I commit any capital to this, because here also, if you'll see, right at the top, the stock did create a negative divergence and then go into a massive correction of around 60%, which lasted almost a year. So maybe we won't see that big of a correction. Maybe there is still some 18-20% upside left. But the problem is that the minimum stop loss which I would have to give you is around 15-16%. The risk reward ratio right now is not favorable to make a fresh position in Electra. My answer to you, Jaswinder, would be no. Don't go for Electra right now. JK Paper fresh entry. I see a lot of people always asking for analysis in stocks where the rally has already unfolded. JK Paper is also one such stock where sure there has been strong rally. Sure, JK Paper was a stock where we had taken a position and made good money in the Trade Together program. But I don't think it's attractive any longer, or at least not immediately. You need to wait for a bit of a correction here. So Apurva is asking for Lakshmi Organic, bought at 291. Lakshmi Organic Chemicals bought at 291. So you're sitting on some losses. I'm going to clean this chart because clearly those trend lines were really old and I couldn't relate with them anymore. So this is like a very, so what I will tell you is, seriously, I think the stock is trying to regain the lost glory and is trying to establish an uptrend, but this 500 EMA on the daily time frame is making it really tough. Having said that, there is a very strong support right here. If you see, there is a bit of a kind of a double bottom here with these two supports. So this is the level of 263. So I would suggest that you maintain a stop loss at the level of 262 and continue to hold the stock. But if the level of 262 gets breached, then please exit your position. Is your analysis based on indicators than price action? Amit, my analysis is based on a combination of price action and indicators, because if you look only at price action, I feel it's a little hard to do analysis for 3 months, 6 months ahead on the basis of only price activity. I use indicators which are price-based indicators. The relative strength index and exponential moving average are both price-based indicators. Moving average is lagging indicator, but RSI or relative strength index is a leading indicator. It shows the change in momentum through which, studying which we can reliably, like not entirely reliably, but with a high probability of success, we can predict how the price is going to unfold next, right? So I combine this analysis with different time frames analysis to find moments of what I call eclipsing, where different time frames are aligned on the same market activity or same bullishness, so that I can position my capital, or I can take positions or allocate my capital to stocks where this eclipsing is happening to increase my probability of success. This is the same analogy or same theory or same mindset that I apply, same strategy that I apply for the stocks that I pick for my Trade Together program. Naturally, right now the market is very choppy, so most of the stocks are triggering stop losses. The whole objective right now is to reduce the risk to the capital, so I'm keeping stop losses quite tight right now, but waiting also for the market to unleash into a rally and making sure that the capital does not sit idle. It's a little tricky situation right now, but thankfully all my members are very patient people, very mature people, and also very cooperative. Jaswinder, my pleasure to help you out. So Amit ji has a stock query as well. VST Tillers heading support and resistance. All right, let's see. VST Tillers. I don't like the chart of support be expected at 28.80. Why 28.8? Don't think this is a very good stock to be holding in your portfolio. Multiple reasons. A very important exponential moving average 200 EMA on the daily time frame has been breached, and it has been breached with increasing volumes, which tells me that the stock is set for a bigger correction. And in my opinion, the next support on the stock is 2500. Let's take a few more queries. Hello, ma'am. Please suggest fresh entry in Central Bank and IOB. So Gautam, I have analyze the charts of IOB and Central Bank just before the session, and I don't even need to look at the charts to tell you that fresh entry in both these banks is not recommended at this point of time. I don't know whether Paytm will be closed. I don't respond to rumors, and let's just look at the chart of Paytm out of curiosity. Ooh, that's a big downside right there. So actually, I remember a few days ago, I analyzed the chart of Paytm for somebody, and I told them to exit the stock because this leg of upside had seen absolutely no participation whatsoever. So my outlook was to absolutely exit the stock, and today, based on this, because of the news that is circulating or the rumors, I'm not sure, I haven't really looked into it, does look like scenario is pretty bad. Massive decline in Paytm. Damn. M&M Finance 308. Can I add more at CMP for Gautam Thakur? M&M Finance. So your holdings in 308. So you're basically looking for cost averaging. I do see volume activity picking up here, but M&M Finance, honestly, the charts don't look very set for momentum right now. They're in a very choppy stance, and I think until this level of 295 or 300 is broken with strong volumes, it's going to continue to stay really confusing. So here is where my alerts are set, and I don't know why this line is still there because I don't have an active position. But anyway, the short-term outlook on M&M does not look that attractive to me. There is a small interim support at 280, so it'll be interesting to see whether that levels get breached. So I think you must be holding the stock since quite a while, at least since September. See, this is why you need to use stop loss, because you've been incurring heavy opportunity cost. The market has been in such bull run, but then you've been holding on to a stock which is an absolute loser. It's a good company, but price action wise, it's a loser in this market. Even now, I would recommend you to use a stop loss at the level of 280 and get out of it if it is triggered. Thank you so much for joining this session today. I will see you again on Monday with another live session in the Retail Trader Special Series, where I bring to you one topic of knowledge and share my insights on how to become a better trader with demonstrations. So I hope you will join me on Monday at 5 p.m. Thank you for being a great audience. Before you leave, please don't forget to like this video. It really helps me with increasing the reach, and also do join my Telegram channel to know more about how I can help you with my swing trading subscriptions, long-term subscriptions, portfolio analysis, one-on-one consultations, and technical analysis advanced courses. All information will be shared in my Telegram channel right after this session. So thank you for joining. Namaste.